Guys, let's go over the OTA Trading View Tools move of the day. Looks like we had some nice retests of the opening range breakout. We found some strong supply and demand zones that worked out. And we went over that today in the Futures XLT. Crude oil is looking like we've got a really nice buying opportunity coming up in crude oil that I really love. I am super excited about it. Definitely trading a full contract on crude oil when we get the right signal or formation, I should say. And let's just go over a few things and take a look, see what happened today. So the first thing we're going to do is go over to your OTA supply and demand zone scanner. Double click onto the scanner. Make sure you have all of the contracts updated from the ESM, NQM, okay, all the indexes, the energies and metals, and so on. So just take a screenshot of that or pause the video. Today, gold switched over to the Q contract, GCQ 2023. So that's the August contract. That's also the contract that is trading on NinjaTrader as well. Your supply and demand zone scanner can only hold 20 contracts at a time. Remember that. So if you wanted more than that, you would just put two of these on there and then just add the contracts that you want. All right. The second thing is just wanted to remind you guys, whatever you're using for your middle time frame, that goes here. So I always use the 1 hour chart for my trending time frame, and that's my middle time frame. The highest time frame that you use, let's go daily, because that's what we usually use. As you can see, it's very strict on the daily, right? Market sentiment is to the downside. And this morning, when we looked at this, it looked just like this. And I wanted to make it a little bit more sensitive. So I went to the 4 hour and it populated a few things in the demand zone column, but still market sentiment was to the downside. Gold was in the demand zone column of the scanner around 8 o'clock this morning and earlier. But even though it was in the demand zone side, market sentiments to the downside, your highest probability trades would have been short today. And we would look at the retest of the opening range accordingly. Now, let's leave it on 4 hour. So just remember middle time frame, 1 hour, that's on 1 hour, and highest time frame or the chart that you're drawing the curve on, make sure that is listed here. It says MACD, that's our MACD, our high time frame momentum filter. So just wanted to go over that real quick. Let's go through our process, right? Every day we want to go through our process because that is what makes us better traders. Let's put this over here. I'm just going to get rid of this for now. You don't have to look at me. So daily chart is down. This is crude oil. So we're on crude oil, cycling down. Momentum is down. So we're looking for shorts. Now, look at where we're at, though. We are in that, we are low on the curve. So let's box this out. I'm just going to take the wick of that curve there and make my demand zone. And we're right in there now. Where is the supply zone? Here's a drop base drop. And this actually, this rally base drop right here is really the better zone, right? Make that red. So there's our curve. And which way is trend going as well here? Let's put our trend. Got some nice signals to the downside on the trend cloud day trading system, pushing down into the curve. So we're in demand, low on the curve, and we are right in this wick here of that candle. Go to the 4 hour. Now on the 4 hour, we're starting to turn up. Momentum's starting to turn up, right? So let's go over this. 1 hour chart, trend is going down. Let's keep it on the daily chart. Momentum is down, cycling down. We love this. This is what we want. Here's 11 a.m. Here's 10, 9 right here. So it went up a little bit further and then dropped. We're going to take a look at that. Let's go over to our 5-minute chart. We're going to use the 5-minute chart because that is what we use for the opening range. Oh, and you see this, guys? Whenever you apply an indicator, it might do something like this. Just refresh your chart and then unclick auto. Then put your OTA opening range on there or any indicator that you're going to use. Let's open this up because we know we're going to be looking for some sort of downward move. Look what happened today. It broke out to the upside. So what were we looking for? We were looking for some kind of bull trap, right? So the move was not to take the breakout, even though if you wanted to take the retest of this, you totally could, but it never came back anyway. So we were looking for the bull trap, right? And why were we looking for the bull trap? Because we had the strongest energies pointing to the downside, right? Market sentiment to the downside. Crude oil is listed there, and it was listed there early this morning. Your trend is down on your middle time frame. Momentum filter is down on the high time frame. Cycling down as well. Right here, there you go. Here's 9 a.m. on the 31st, 9 a.m., 31st, cycling down on the high time frame, and momentum is down, and that is in line with our trend. So we're looking for a breakdown of the opening range. But what happened? We broke to the upside. So what do we want to look for? We want to look for some kind of bull trap. Where's that going to be? OTA core strategy, right? So a couple of things here. Now, Taylor Frame identified, and rightfully right here, right? From here to here. And look what happened here. That very first test gave you a nice move down. And when I saw it go sideways like this, I was looking at two different entry points here, because obviously you have the first supply zone, and then you have the second supply zone, which is right here. Let me show you something very interesting, and I'll show you why I took the higher zone. Go over to the hourly chart. Let's focus on the hourly chart. Let's bring up our cycle indicator on the bottom here. Now watch this, guys. Grab the Fibonacci retracement tool. Now, do you see this cycle? This is the previous cycle right here. So you go from top all the way to bottom, from top of the cycle to the bottom of the cycle, top of the wick to the bottom of the wick in that leg. This is going to give you levels of resistance. And look where the very last level is. Let's zoom in on this. Look at this. 718 retracement level. That's right at that original move. Let's look at it on the 5-minute chart. See how we use the higher time frame for Fibonacci levels and curve and major levels of support and resistance, and then we examine it on the lower time frame. Very powerful technique. So here's the original move that a lot of guys took today. All right, did this in the futures XLT, came up, nice rally up, nice rally up here, bull trap, pulled back, and look what happened here. It started going sideways, making all these wicks. That was very suspect to me. I had everything set up here and waiting right at this 886 retracement level. So my entry was from here to here, $340 risk. That is comfortable for me, all right? But I only had one contract. So because I only had one contract, you have to take the target. You've got to take that 2-to-1 entry point. walked away with a little over $700 today. Went a little bit past here and closed out of the trade. So again, 2 entry points. I didn't want to risk one and then do the other one. I just went with the furthest supply zone, and it was an 886 retracement level. And I knew one of these was going to be a bull trap. So it came up, hit that right to the tick, like right to the tick on that 786 retracement level. And I was like, oh man, easy come, easy go. So it goes down and it starts forming these weird candles. It's bottoming out. And I'm like, here we go. Come on, baby. And sure enough, rallied up, hit that 886 retracement level, got into the trade and pulled right down, hit my 2-to-1 target, and I was out. So beautiful trade today on crude oil for the bull trap. Not the retest of the opening range, because we were low on the curve. We're in a downtrend. Momentum is down. We're cycling down. Why on earth? You don't take anything that's counter trend. So we didn't really want to take even the retest of this to the upside because it's counter trend and we just don't want to do that. Now that we're becoming extended, oh boy. Remember what happens when we get extended? Let's go back. Let's try to find an extended trend here. Let's go 4-hour here. Yeah, see right here? So when was this? This started turning blue April 13th. We were in this uptrend, hit that 5th wave, bam, started going sideways and boom, dropped. 5 waves down again, formed that gigantic pin bar and boom, to the upside, right? And you never know if it's going to be a trend to the upside or if it's just going to close above that 50 simple moving average and recalculate. So it could reverse and start going up, or it can just close above and go sideways, recalculate, and then go back down, which is what it did. How many waves did it go above there? It just couldn't get past that first wave. See that? Just couldn't get past that first wave. And now we recalculated and we're going back down. Now on the 4-hour chart, we're early in this, but on the 1-hour chart, 4th wave, and this is our trending time frame. 4th wave comes down, 5th wave, candles will start turning blue, and then we'll start to look for a shift in momentum, which we're getting that shift now on the 4-hour chart. And we should start to see some formations like an opening range, breaks out to the upside, retests, and bam, we're in business. So that's what I'm going to be looking for on crude oil. We're going to be looking for this to break below here, form that 5th wave. Candles will turn blue on the 1-hour chart, and we will start to look for some sort of sign that we are breaking to the upside. And we know what that looks like. It looks like this, right? So when this comes back down, we want to see some kind of breakout to the upside, breaking past previous structure, and then instead of meandering around going sideways, what we want to see is an initial retest, right? Breakout to the upside. We want to see this come back down. We want to see this come back down into here within the hour, right? Not over a long period of time like this. That we don't want. We want this type of initial retest. And then when we get in here, drop base rally, that is when we take the trade long. And that is going to be a beautiful day. But that is the idea. That's our process, right? We have a developed and back-tested process. So look what happened here. We formed this rally-based drop, and then the initial retest, this happened in 5, 10, 15, 20, 25, 30 minutes. Half hour, bam, right back. It's still early. 9:30 in the morning, hits that 786 retracement level, goes back down. Maybe you took some profit there, went a little bit deeper, hit the 886, and then bam, you're in business. Now, if you had two contracts, if I had two contracts on here, the procedure is once you hit that 2-to-1 entry, your stop loss goes to break even, a little bit lower than break even to cover any costs. And then when it hits the 3-to-1, then you would bring it to target 1. 5-to-1, you bring it to the next target. And in this case, it's making some really nice peaks. So I would just follow this down peak by peak right there. If I was still in this trade, one contract, I'd put my stop loss right there. Why give anything back? Don't give anything back. Let's get rid of that. Video's getting long. I think that was a great lesson. Let's look at gold today and see what happened. We're going to use the same method, guys, right? Let's get rid of all this. Get rid of all the drawings. Let's go to start with the daily, go to the daily chart, and let's close everything out and just do like that. See, that's how you keep your TradingView charts nice and neat. Unclick that. Moving average. Look at that. All right, so on the daily chart, we hit that 100. It's stuck to it, right? We don't have a full candle below, and now it's trading above the 100. Where's the 200? All the way down here. Not relevant. All right, so we'll keep that 100 up there. And let's see, opening range breakout. Interesting. Look what we've got. So here are all of the levels. Here's previous month's low, previous week's low. Here's that previous week's open. Tom Jenkins talks about it all the time. Previous week open. That could be a good turning point. It's right in this rally-based drop on the daily chart. Let's box that out. Box that out. Hit that magnet. And we can go, let's go there to there. Let's take it like that because it already hit that area. There we go. Wow. Came down, hit that previous month's low there. Previous week's low, previous week's close. We're trading above that. We're heading back towards this previous week's open. We have not hit it yet. Could be a good turnaround point because where are we? We're sideways now, right? We went sideways, but we broke below all this structure here. Look at that. Candles are red. We're below the 50. To me, that's why I like things visual. That's why OTA TradingView tools. To me, this is a downtrend. I am identifying this as a downtrend because it meets my rules as a downtrend. Candles are red. Now we do have upward momentum. So this is cycling back up to this zone, right? And look where it is. It's right in the cloud. It's in the cloud. Previous week's low. Let's go to Fibonacci. Let's go high time frame Fibonacci. Here's the top of the cycle. Here's the bottom of the cycle. See how this doesn't count because it didn't hit that middle gray area? So we're counting from here all the way down to here as one leg. That's how you know that this is one leg from there to there. So where do we have anything? We don't really have anything. We've got that 50% retracement level though, right at the 50, right by the previous month's open. But the previous week's open is in the middle of that supply zone in that curve there. So who knows? We don't know what's going to happen. We just know that this area here is some kind of turning point. All right, let's get rid of that. Let's go to the hourly chart. So we're on the daily, facing up. We're on the hourly, facing up. So everything is matching. Everything is matching for an upward breakout today. And gold is on the demand column for our scanner, right? Go to the 15-minute chart. Let's open this up. And here's today. I love how everything is so organized. Like, here's today. Here's yesterday. Here's the day before. So we're going to use 15-minute chart. Don't forget to switch it. We're on metals now. And what do we have? Really? Who knew that this was going to break out to the upside? We knew. We knew because up, green candles. What happened here? Now, formed that 15-minute candle. So we broke out to the upside right here. Here's your break above, close above. And look at this, guys. Here's your initial retest. Your initial retest is right here. This happened, after this big move, but look at how it climbed out of that range. So you always want to take the initial retest, and that's right in here. So here's your rally, base, rally. You got 1, 2, 3, 4 candles inside of this rally, base, rally. That's totally acceptable. And initial retest, right in there. There's your move on the opening range retest. We like this candle because it closed above. These are breakouts, and that's cool too. If you took the initial retest of the breakout, then you would have been in this bottom. You would have been in here to here. And there's your entry right there. So either one. If you waited for it to break above, close above, that's this candle right here. Here's your initial retest into this zone. Let's get rid of that. And bam, right back up to that supply zone area. Definitely made your 2-to-1 entry. So your entry, buy one. Remember, this is the full contract. Stop loss would have been right there. $140 comes in, and your target right there, almost. There's your 2-to-1 right there. So if you did the full contract, you had maybe 1 or 2 on there, depending on your account size. Don't want to go past 1%. And that is a winner. Why is this a winner? Because it's in our scanner, upward momentum, cycling up, upward trend. Take that breakout. Take the retest of that breakout. It hits twice, rallies, beautiful move, and then it comes back and makes another move. But this zone has been hit twice. It's been hit once, it's been hit twice, made a beautiful move. We're going to the next zone. Now, this pulls back pretty deep, so it does break past the original range, right? And that original bottom zone there. Let's say you took, if you're looking at the whole thing as a zone, this ate up a lot of buy orders. It came down. It wanted to search a little lower. What did it do? It came down to this rally base rally right here. Come on. Rally base rally. It came down to this area. You'd have to pay attention to that, but this happened at 10 a.m. So real strong rip down. It ripped up, it ripped down. Gold will do that. Gold will do that sometimes. You got to take the very first entry. The later in the day it gets, the harder it gets, guys, or the more whipsaw you will be exposed to. So went down there. Let's look at it on the 15-minute. What does it look like on the 15-minute chart? There you go. 15-minute chart. There you go. Aren't any levels down there. There's a level here. That looks like the previous day's open. So just missed the previous day's open. 15-minute chart, but beautiful retest. This rally-based rally is much stronger than this drop-based rally. It just went further, but there's no telling. There's no telling. It could have gone down to this, right? It could have gone down to here. Maybe you put your entry point right here on that previous day's open and totally missed the trade. There's no way to really zone in on something like that. Let me leave you guys with a story here. So real important. We saw some examples today. You're never going to know what zone it's going to hit. So Mark Douglas gets into this, and I highly recommend his book. And he says, if you think of this as a coin toss, right, where you do that experiment, you figure out the formula. It's very easy to figure out the mathematical formula for the average number of times the coin turned up heads, right? So you flip a coin 100 times. How many times is it going to come up heads? Probably 50%, right? So that formula is very easy to figure out. You're just calculating the average. What happens if you take a piece of lead, solder it onto the tail end of the coin, making that side heavier, so that when you flip the coin, it lands tail side down more often than it would if it wasn't weighted, right? So you would do the same thing. So let's say it comes up now, heads comes up now 53 or 54% of the time. You use the same formula. You use the same mathematical formula. Number of heads divided by the number of flips, right? Times 100. So it gives you the percentage, right? What if I asked you, what is the mathematical formula for finding out the sequence of heads and tails? There isn't one. There is no mathematical formula to figure out the sequence of heads and tails. It does not exist. So it's the same thing. There is no mathematical formula to tell you what zone is going to work. Then what do we do? Just take all of them? That would get expensive, right? But if there's two and you're only risking 1% of your total account, at most, you're only out 1%. So the first zone doesn't work, minus 1% of your total current account value. Second one worked, and it rips to a 5-to-1. Now, if you only have one contract, you got to remember, you can only take that 2-to-1 ratio and then you're out. If you have two contracts, then you can scale out of the position. So I'm going to leave you with that, guys. Hope you enjoyed this. If you have any questions, you can DM me here on the private Facebook group, or you can hit me up at chris@chrisgiuliano.com. Thanks, guys. I will talk to you tomorrow.